Westpac forecasts a 20% house price boom. Now it's their turn. Let's have a look. Hello everyone, Florian Heiser here and welcome to another episode of Heiser Says. Grab your stein of coffee, let's have a look at this article from news.com.au written by Natalie Brown. Because, well, guys, it looks like it's now Westpac's turn to predict a surge in house prices. A 20% jump in Australian house prices. After we've had our first recession in 28 years, where the economy is propped up by JobKeeper, a job seeker bonus, where we've had trading while insolvency allowed for most of last year, and that 28 days should be kicking over. We should start seeing some action there. Insolvencies are down 50% of where they normally are. We've got banks giving mortgage holidays. We've got moratoriums on rent. But we also have some industries that have not been affected at all. And some people have been forced to save because there was actually nothing for them to do. There was a young couple that saved a deposit in 6 months instead of 2 years. And then we've got the government as well, pouring stimulus onto the housing sector. They have taken the jerry can off the back of the ute and they're pouring it on that fire with reckless abandon. They're going to get it going. So is a 20% jump after, the falls we had last year, is that unreasonable to expect? And will it be a dead cat bounce? So are we going to see property, go up, taper off a bit, go up again and crash? Or is it going to shoot up? Or will it be a K-shaped property sector? Houses heading one way, units and investment grade products the other. Because international students haven't returned. Migration has fallen off a cliff. International tourism, well, non-existent. That's the question we're all asking. And I was talking to someone today. He was waiting for, price correction so he can jump in. But he's kind of thinking, maybe I shouldn't. Maybe I should just jump in. I'm telling him, but that could be FOMO. So, Australia's second biggest bank has predicted a 20% jump in Australian property prices between now and 2023, which would see the value of homes in Sydney surge by $200,000. Westpac said record low interest rates of just 0.1% would see real estate values in our nation's capitals rise by 10% both this year and next. In Sydney, that 20% increase 2 years from now would see the median house price jump by roughly $207,000 from $1 million to a whopping $1.24. There you go. The bottom line is that Australia's housing upturn now has strong momentum that looks to be lifting further and will remain well supported by monetary conditions and an improving economic backdrop, Westpac economists Bill Evans and Matthew Hassan said. A strong recovery from last year's recession and Australia's vaccine rollout, which began today, have also played positive hands in matters. Well, we'll see how the rollout goes. I don't know if the uptake, even in Israel, which is having such, insanely high rollouts and coverage, the number of, people that aren't below 85 that are taking it is pretty low, guys. How many people can be bothered, honestly? So, note that the vaccine developments will also influence the relative performance of different housing markets, Westpac said. The smaller capital cities and regions are well placed to continue to outperform in 2021, but growth will swing towards the three eastern capitals of Sydney, Melbourne and Brisbane in 2022, as the end of the pandemic allows international borders to reopen. That's the thing. Here in Brisbane, we're still behind Sydney and Melbourne. You can still get a decent house in this for under 500. What if we start gravitating up to the same prices for the Melburnians or the Sydneyites? It's all well and good, fantastic. I've made money, you feel fantastic. You've got all this equity in your property, but you got to think of the next generation. How can Australia get off this property obsession? How can we get off it? What is the next government going to do? I would advocate we need to wean off negative gearing and we need to allow people to write off their interest payments on their primary residence. The argument being you should pay yourself before you pay the state, and then phase out superannuation so people have more access to their own money. Or maybe when you hit at a certain cap, then you can start using the money. Or once you have a house, once you have your first house, deposit for a first house buy, then you put into your super. So your first chunk of super goes towards a house, automatically. And then from then on, it goes into the control of the banks and the unions. I'd rather it be completely abolished and people have control over their own money. But that's probably a controversial opinion these days. People having control over their own lives. We can't have that now, can we, guys? So Sydney. So they're saying an increase of 207. Melbourne, 147. Brisbane up another 100 grand. Adelaide up 90. Hobart, 78. Hobart's just going crazy. What's going on in Tasmania, everyone? Perth up $100,000. Economist Sol Exley told the Sydney Morning Herald last month that recent gains in the housing boom are unlikely to be undone. I would say the rise in house prices is probably sustainable, he said. Indeed, we could see further gains in many regional cities as people adapt to the opportunities created by more widespread acceptance, at least for white-collar occupations, of working from home. See, this is the thing. We're gonna see. Well, there's gonna be some people that come out of this better off than others, guys, and it's gonna be people who can work from home. Now, I've been working from home for years. We've had two offices. One was in South Brisbane. We were at the back of a warehouse. That was, costing me about 40 grand a year. And it was expensive. The one good thing was we had fiber. And we had a bigger team there. So, I had to get out there and get the work in and, maintain it. Then we went to a little place in Yeronga. We probably cut that about to 25 grand a year for a little, shop front. And we did it up nice. It was good. But after a while, these are just costs that are just there. I can work just as well from here. We don't have the staff anymore, but if I need capacity, I'll get a contractor in. But I guess that's just something you live and learn. And it's the type of work that we do. We'll work with, at the moment, we were doing a couple of years ago, we were doing a lot of point cloud conversion work. Now we're doing a lot of education work, where, I will generally always go out and meet people. I don't really need a tenancy to get them here. But, I can see more people appreciating that because you work from home, you don't have the commute. And even, I'm complaining about my little 30-minute commute when we were going to Yeronga, guys, from Sunnybank. That's nothing. That was nothing, getting that commute there. And it still was annoying. It's enough to get home and exhausted. I feel sorry for the people that do like a 1 or 2 hour commute into the city. So that's going to change. So, and think about it too. If you're living in Sydney or Melbourne, you could buy a crappy unit, or you could go up here and get, a big house with some land. Then even if you have to fly down once a week or once a month for a meeting, everything else you do remotely. Would it be a better life, guys? Much of the demand is coming from first-time buyers, who appear to perceive an opportunity to get into the housing market without facing the competition from cashed-up immigrants or negatively geared domestic investors, which has squeezed them out for most of the preceding 30 years. Prolonged border closures, however, could hurt house prices from 2023, Westpac warned. If borders remain closed for longer or migration inflows are slow to restart, that could lead to a market-wide physical oversupply of dwellings by 2022, the bank said. How that may influence market conditions and the price growth is unclear. Well, if it has the potential to have even any negative impact on prices, I'm sure our glorious leaders in politics will do whatever they can to ensure that doesn't happen. What do you reckon? I think they'd open the floodgates. There'd be incentives. They would do something to maintain property, to keep the wealth effect going, to keep the status going. What do you think, guys? Are you waiting, or are you jumping in? Or you think is it just FOMO fueling it? I mean, I can understand why first-home buyers have had enough. They just want to get in. People get frustrated. They get so frustrated just looking. They just want to jump in. Let me know your thoughts and opinions in the comments down below. Please like, share, and subscribe to the channel. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join the channel on YouTube or Patreon. You can support us using our affiliate links from Amazon, eBay, Independent Reserve, or Aussie Broadband. You can buy our merch from Heiser Says, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. Have a great day. I'll see you next time. Bye for now.